Hello everyone, I hope you're all doing well and I'm thrilled to be here talking to you about something that is incredibly important but often overlooked. This is life insurance. Now, I know what you might be thinking. Life insurance doesn't exactly scream excitement, but trust me, today's discussion is going to be different. We are going to dive into how life insurance isn't just about planning for the unexpected, but it is all about securing a peace of mind for you and your loved ones. I think of it as a safety net, a way to ensure that no matter what life throws on your way, you and your family are protected. And here's the best part. By the end of the presentation, you will not only understand the value of life insurance, but also feel confident in making informed decisions about your future financial goals. Let's embark on this journey together, and by the time we're done, you will say, life insurance, sign me up. My name is Joseph Awidi, and I'm a life insurance agent. I'm working to educate, highlight importance, and create awareness on why families need to make a precise financial plan, and also address your concerns about life insurance. I know probably there's a section of you who have burned terms with some life insurance companies out of unclear circumstances. We are here to help you put things in order, and by putting things in order, together we'll follow up to ensure we get you a solution as we help you understand your coverage better. Together we build a resilient future. Now, today we are going to discuss about major life insurance products. Number one product that we're going to talk about today is the education policy. This has been a common product under life insurance. I know probably there's section of you who have heard about the education policy or have got at least an engagement with any life insurance agents or financial advisors. Let's begin. Why do you need to plan for your child's education? You see, the goal of every other parent is to ensure that their children start a life with a good foundation. And the only way to ensure that your child or your children will start a life with a good foundation is when they have right and quality education. How will you guarantee that they have the right and quality education, whether you will or may not be able to provide for them this basic need in future? Because life's unpredictable and you can't tell what awaits in the next minute. The cost of education is one of the most expensive things that parents incur in their lives today. It costs a lot of money to educate a child up to institutions of higher learning. Some parents have ended up selling their properties to afford school fee for their children, while other children have found themselves less privileged for not have had the basic need of education, which in turn weaken their foundation in life, however much they might struggle to bring success at bay. But all this requires proper and prudent financial planning so as to guarantee your child's education, whether you will or will not be there. Now, how does the plan work? The education policy combines the benefits of savings product with life insurance products, allowing you to accumulate funds to help you achieve your goals while protecting you and your family against the worst life can throw at you. The policy is designed to help you achieve those goals that are absolute, like your child's education, because in the event that you are to prematurely pass away or you are unable to work due to a disability or critical illness, the plan has guaranteed cash payouts to help your family get back on track and ensure your child's education will not be compromised. Now, let's get quickly into the product benefits. As we have said, number one, under the product benefits, there is savings benefits, which are the guaranteed cash payouts. Now, with the plan, you decide how many guaranteed cash payouts you want, whether you want 4 payouts to help you pay university's fees. Maybe you feel that there will be much more financial burden when the child is at the university level, or maybe all the way from high school level. You choose how many payouts you want, or you want one payout at the end of the policy term, and no problem, you are in control. The plan sets you free to choose what is the total amount you want to receive, which is the target savings amount, your savings period, how many cash payouts you want to receive, which are paid during the last policy years. Another benefit is the policy attract annual bonuses. In addition to the guaranteed cash payouts, the plan offers attractive annual bonuses during the lifetime of the policy. These bonuses accumulate every year and are paid out on maturity or death. Now, we are getting into our protection benefits. We are going to start with the death benefit. I know people are scared when death is being mentioned, but it is an uncertainty, and there is a reason why we need to talk about it when considering a financial plan. Don't be scared, because no one is wishing you to die soon. We are going to start with a natural and accidental death benefits. In the unfortunate event of you prematurely passing away before the maturity date, the policy will pay a lump sum to your beneficiary or beneficiaries to help them through this difficult time, and most importantly, there will be no more premiums to pay. It is called a waiver of premiums. The guaranteed cash payouts will still be paid to your beneficiary or beneficiaries according to the cash payout plan. If your passing away is caused by an accident, the lump sum paid to your beneficiary or beneficiaries will be doubled, which is 200% of sum assured. There is a problem here. What is sum assured? Sum assured Now, it refers to the guaranteed amount that the insurance company will pay out in the event of a covered claim. It is always a specific sum of money that is promised to the policyholder or their beneficiaries upon the occurrence of the insured event such as death, a disability, or critical illness as defined in the policy terms. This is a crucial component of an insurance policy as it determines the financial protection provided by the policy and forms the basis of calculating premiums and benefits. Still under the protection benefits, we have the benefits of a critical illness cover benefit. This benefit exists here as a rider. What are riders? Riders are basically additional provisions that adds or modifies coverage. They are used to customize a policy to better suit your needs by adding specific benefits or coverage options that may not be included in the standard policy. And now this optional critical illness benefit can be added to your policy, giving you a lump sum payment on the first time diagnosis of critical illness such as cancer, stroke, or heart attack. Furthermore, there will be no more premiums to pay, which is called waive of premiums, and the guaranteed cash payouts will still be paid according to the cash payout plan. Riders can also exist as standalone policies if you need them alone without being added to the main policy. Still under protection benefits, we have total and permanent disability cover benefit, which is also a rider. It is optional benefit. In case of disability, there will be waiver of all future premiums, meaning there is nothing more to be paid by you, and the guaranteed cash payouts will still be paid according to the cash payout plan. Another thing that is unique about this education policy, we also have the hospital cash plan. This is also a rider. Remember, riders are just additional benefits that you can decide either to include or not to include, but it is often advised for you to include them because they extend your coverage and they ensure that you are all covered in different aspects. So we are talking about hospital cash plan. Now, this is also a rider. This is an income replacement strategy in which gives you, as the principal life assured and listed members of your family protection against loss of income due to hospitalization. And here you can list any family member starting from you, your spouse, children, to parents, and even parents-in-law. This works in a way that it ensures you or the listed members continue to generate some income when hospitalized for up to a maximum of 30 days in a given policy year. So other benefits include insurance tax relief of 15% of the premium paid up to maximum of Kenya shillings 60,000 annually, which converts to a monthly premium of Kenya shillings 5,000. Also, there will be no medical examination for sum assured of Kenya shillings 5 million and below. Now, policy term starts from a minimum of 10 years to a maximum of 20 years. And here is some bit of information that you need to know. We never know if we'll continue to generate how to get our finances to service our policy throughout the policy term. Sometimes we may get financial challenges on the way and become unable to further contribute, and at this point you can acquire a surrender value. That is after the first 36 months, being that there are no arrears. You can check on the terms and conditions first for your preferred company so that you ensure you have every little bit of information that is needed. Now, a policy loan is also available once the policy has acquired a surrender value, which is that after 36 months, which is 3 years, and in most cases the loan is always separate from the policy and therefore it is required to be paid separately. Last but not least, waiting period on critical illness and death or disability due to natural causes is subject to 6 months waiting period from the policy commencement date. Well, that's all about education planning for today. And education is not just about finances. It is about investing in the future of our children and the generations to come. So let's continue to work together to ensure that every child has the opportunity to pursue their dreams through education. Now let's grab some cup of coffee as we are about to get into the next thing. Ensure you pay attention because we are getting into the most interesting bit of it all, and I'm sure you'd want to listen because it is the mother of all life insurance products and the one that will take the most care of you and your family, which there is no other product that will in this level. Alright, let me introduce to you whole life and term life insurance policies. Imagine living in a stress-free life knowing that your family's future is secured even in the face of unforeseen circumstances. It sounds too good to be true, right? Well, it isn't. Financial security isn't just a dream, but it's a reality that can be achieved by careful planning. And one such strategy is investing in a whole life insurance, a safety net that promises to stand strong through life's ups and downs. So what happens if unexpected strikes and you haven't planned for it? Have you ever thought of leaving a legacy for your dependents? Then here is where you're gonna get the product that will help you plan for a legacy, to leave a liquid inheritance to your heirs. Whole life insurance is a type of permanent life insurance that provides coverage for your entire life as long as premiums are paid, unlike term life, which provides coverage for a specific period. One of the key benefits of whole life insurance is its stability and predictability. The premiums remain level for the life of the policy, providing a consistent financial commitment that can be factored into long-term financial planning. It offers flexible premium payment terms, allowing you to finish paying premiums within a shorter period while enjoying the cover for the rest of your life. Additionally, whole life insurance offers tax-deferred growth on the cash value, helping you build a nest egg for the future while protecting your loved ones with a guaranteed death benefit. Throughout this presentation, we'll explore the various features, benefits, and considerations of whole life insurance, empowering you to make the informed decisions about your financial future. So let's discover the benefits, features, and considerations of whole life protection plan. The whole life protection plan gives you a protection in the event of death, critical illness, or total and permanent disability. For the critical illness and disability benefits, in this case are riders that you can decide to incorporate within your policy so that you get a wider coverage within a single policy. I hope you're now aware of what riders are, because I've just explained it a couple of minutes back. The product offers you the option to cover your spouse in addition to yourself, which means you can take a joint life cover or a single life cover. This could either mean you can decide to extend the coverage to your spouse in a single policy, and it helps create an immediate estate for your dependents, helping your family maintain their lifestyle without having to sell land or property. And this benefit is always crucial for legacy planning. Come what may, who goes first, all the opportunities will be given to your family as a legacy for the deceased person. And it helps you and your family offset the financial strain of critical illness in the event that you or your spouse is diagnosed with critical illness defined in the policy. And of course, the waiver of premiums takes effect from the date of diagnosis of the critical illness as also defined in the policy. The plan offers bonuses throughout the lifetime of the policy. It offers flexible premium payment terms, which we have talked about, allowing you to finish paying premiums within a shorter period of time while enjoying the cover. And no medical examination is required for sums assured of up to Kenya shillings 5 million, and you can claim insurance tax relief for 15% of premium paid up to a maximum of Kenya shillings 60,000 annual, which is 5,000 monthly. There is a 6 months waiting period on death due to natural causes and critical illness. Claims due to accidental deaths and accidental total and permanent disability are not subject to any waiting period. I didn't mention this earlier, the difference between natural causes and accidental causes of death or disability. Just to know the difference between natural and accidental causes of death or disability. Natural causes would mean death or disability caused by internal causes like illness, while accidental causes are deaths or disability caused by external triggers or external factors like being hit by a car, fall from a height, or being hit by a falling object, and all that. The policy can also not be surrendered nor used as a collateral for loan. When considering any type of life insurance coverage, you always need to dig deep into the policy's terms and conditions, since they mostly differ in some narrow principles like age limits, sum assured, and etc. The ones that we have discussed are in broader perspective for how most of the companies structure them. For the finer details, seek them when you intend to buy a coverage. All the same, I'm here to guide you and help you get the best coverage for your needs. As far as whole life insurance is concerned, that's all you need to know from the general point of view. Let's check on term life insurance coverage. Term life and whole life are almost the same, except that term life offers coverage for a specified period of time, and the whole life provides coverage for the entire life of the persons assured. So let's look into its features. Term life is an insurance plan that provides for a specified period financial protection in the event of either death, critical illness, or total and permanent disability. The plan can be purchased by an individual and assigned to a business for key person protection, or assigned to a lender as a loan protection for cover on death or total and permanent disability. In addition, the plan allows for joint cover for either a spouse or a business partner to be covered under the same policy. If purchased as an individual cover, it helps create an immediate estate for your dependents in the event of unfortunate life events covered under the policy, helping your family maintain their lifestyle without having to sell family's assets. Alternatively, if purchased and assigned to a business as a key person protection, it provides funds to the business in the event of unfortunate event covered under the policy. The plan provides an option to help you offset financial strain in the event of first-time diagnosis of a critical illness defined in the policy. The critical illness benefits, however, only payable to the life assured. It provides an option to double the cover in the event of death caused by an accident. It offers flexible policy term periods, allowing you to tailor the product to suit your life insurance needs. No medical examination is required for sums assured up to Kenya shillings 5 billion, and it offers insurance tax relief for 15% of premium up to a maximum of Kenya shillings 60,000. Now, what is the surrender benefit? The policy does not have a surrender value. Please note that this is not a savings product. The policy provides joint life cover, giving cover to your spouse or business partner under the same policy. Death, disability, and critical illness benefits, if purchased, are paid on first death or diagnosis basis of either life assured. The policy ends on the payment of a death or disability benefit. The benefits are subject to the waiting and survival periods defined in the policy and the policy terms and conditions. Due to product innovations and diversification, these products vary from company to company and from time to time, and it is recommended to consider a financial advisor to help you in decision making, since you may not be aware of the changes. We are done with term life and whole life. Remember that we had some cup of coffee. Let's finish up our coffee and stretch a little bit so that I take to the endowment assurances. These are products that provides you with the benefits of both savings and life insurance to help you realize some of your long-term or short-term projects. Maybe you're planning to build a home or purchase one in a couple of years to come, and you're not sure where to start from. Or maybe it's all about expansion or starting up a business, a mortgage down payment or dowry payment. These plans keep you in control and ensures all your worries are taken care of. All you need to do is to listen and take the relevant action immediately. I hope you are done stretching, and let's continue. Now, I'm getting straight to savings products. Long-term savings and short-term savings. These policies operate almost the same as the education policy that we've discussed in a while. I'm taking you straight to the benefits, features, and considerations of these policies. Now, how does the plan work? The savings, like education policy, combines the benefits of savings product with life insurance product, allowing you to accumulate funds to help you achieve those goals that are absolute, while protecting you and your family against the worst the life can throw at you. What are the product benefits? We have the savings benefits, which are the guaranteed cash payouts. With the plan, you decide how many guaranteed cash payouts you desire, whether you want several partial maturities before the actual maturity or one single lump sum at the end of insurance term. You have complete flexibility. The plan sets you free to choose what is the total amount you want to receive, which is the target savings amount, your savings experience, and how many cash payouts you want to receive, which are paid during the last policy years. In addition to the guaranteed cash payment, the plan offers attractive annual bonuses during the lifetime of the policy. These bonuses accumulate every year and are paid out on maturity or death. And then we are getting straight to protection benefits, natural and accidental death benefits. If you pass before maturity date, the insurance will pay a lump sum to your beneficiaries or beneficiary to help them through this difficult time, and there will be no additional premiums to pay. This is known as waiver of premiums. The guaranteed cash payouts will continue to be paid to your beneficiary or beneficiaries in accordance with the cash payout plan. If your passing is due to accidental means, then the lump sum paid to your beneficiaries or beneficiary will be doubled to 200% of sum assured. Now, critical illness cover benefit. This extra critical illness cover feature can be added to the policy, providing you with a lump sum payment if you are diagnosed with a critical illness for the first time, such as cancer, stroke, or heart attack. Furthermore, all future premiums will be waived, and the guaranteed cash payouts will continue to be paid in accordance with the cash payout plan. Riders can also exist as separate policies. I hope we have mentioned that before, if they are not required to be incorporated in the primary policy. And total and permanent disability cover benefit, which is also an optional benefit. With this optional benefit, in case of disability, there will be a waiver of all future premiums, meaning there is nothing more to be paid by you, and the guaranteed cash payouts will still be paid according to the cash payout plan. Hospital cash plan benefit. This is an income replacement plan that protects you as the principal life assured and the named members of your family from income loss due to hospitalization. Other advantages include insurance tax relief of 15% of premium paid up to a maximum of Kenya shillings 60,000 per year, which translates to a monthly premium of Kenya shillings 5,000. There will also be no medical checkup for sums assured of up to Kenya shillings 5 million or less. Policy term starts from a minimum of 5 years to a maximum of 20 years. Surrender value after 36 months since commencement of the policy, and that there are no arrears. A policy loan is also available once the policy have acquired the surrender value, and in most cases the loan is always separate from the policy and therefore is required to be repaid separately. Waiting period applies the same as the education policy. You realize the education plan is literally the same as the savings policy. That was all about the savings for both short-term and long-term goals or projects. Now we are getting to number 4, which is memorial family cover. Some people call it last respect or last expense cover. Now, have you ever dealt with the financial impact of losing a loved one? It is so often that this always comes with a financial cost to incur, right from the pending medical bills that the deceased person might have left behind to mortuary bills and funeral arrangements. Today, I bring you a solution to this, a solution that provides a softer landing when such tragedy occurs in our midst. Many of these occasions do not always find us aware, and sometimes you run into debt just to lay a loved one to rest. With this coverage, you are able to include anyone that you care about within your family, starting from you, your spouse, children, parents and parents-in-law, grandparents, uncles and aunts, brothers and sisters, cousins, and any other member of the wider family. And with this product, you don't have to pay for a longer period. You can finish paying your premiums within a shorter period and wait for reimbursement when a tragedy falls. It doesn't matter how long it might take to witness the first tragedy, but as long as you recovered, that's okay. Now let's examine some of the benefits of this coverage. In the event of death, the cover pays you, your estate or your nominated beneficiary the sum assured which is specified in the policy schedule. Accidental death benefits only payable in the event of accidental death of the policy holder or the spouse. Accidental disability benefit. This disability due to accident will pay 100% of sum assured or 50% of sum assured depending on the circumstances. In the event of the following, 100% of sum assured is paid: permanent loss of sight in both eyes, permanent loss of hearing in both ears, permanent loss of speech, permanent loss of 2 limbs above the wrists or ankle, or loss of use of one side of the body, or the loss of use of the corresponding parts of both sides of the body. And 50% of sum assured is paid in the event of the following: permanent loss of sight in one eye, permanent loss of hearing in one ear, loss of use of one limb above the wrist or ankle. Loyalty benefit, which equals to 50% of annual premium, is payable on every 5th anniversary and every 5 years thereafter, provided the policy remains in force and there are no premium arrears. The policy cannot be surrendered, and it has a waiting period of 6 months from the commencement date on death due to natural causes. You can also incorporate an hospital cash plan rider into your policy if you wish so to extend your coverage. Alright, we are done with the memorial cover, and the last thing, which is number 5 that we're going to talk about today, are the riders. We're going to start with the critical illness rider. This rider exists as a standalone policy. We've seen riders can be incorporated into primary policies to give a wider coverage, but also it can be considered as a primary policy when it is taken alone. It might be the only thing that you are lacking in order to have a complete financial plan. In this occasion, it is wise to take it as a standalone product. This rider includes the following benefits. The critical illness care is an insurance plan that provides for a specified period lump sum payout in the event of first-time diagnosis of listed critical or terminal illness, or if purchased at an additional benefit in the event of death. The plan provides a lump sum payout to help you offset the financial strain in the event of first-time diagnosis of a critical or terminal illness defined in the policy. The critical or terminal illness benefit is payable to you. It further provides you an option to purchase an additional death benefit, which would help create an immediate estate for your dependents in the event of your unfortunate death, helping your family maintain their lifestyle without having to get into selling family assets in order to maintain their living standards. It offers flexible policy terms, allowing you to tailor the product to suit your life insurance needs. No medical examination is required for sums assured of up to Kenya shillings 5 million, and it offers an insurance tax relief of 15% of the premium up to a maximum of Kenya shillings 60,000 annually. The policy does not have a surrender benefit, and the surrender value is only applicable to the savings policies and education policies. A hospital cash plan as the second rider. The hospital cash plan, as we have said, is an income protection plan, giving you as the principal life assured and the listed members of your family protection against the loss of income due to hospitalization. A fixed benefit is payable in the event that you are unexpectedly hospitalized in a national hospital insurance fund accredited hospital, and benefit is payable for up to a maximum of 30 days of hospitalization in a policy year. Cover for listed family members, spouse, children, parents, and parents-in-law cannot exceed the principal life assured benefit. Again, there is no surrender benefits here. Now, ladies and gentlemen, as we conclude our discussion on life insurance, I want to express my heartfelt gratitude for your time and attention. Today, we've played the invaluable role life insurance plays in securing families' future. Remember, it is not just about financial planning, it is about peace of mind and priceless gift of protection for your loved ones. I encourage each of you to take this knowledge to the heart and consider profound impact it can have on your family's well-being. Embrace the opportunity to make a lasting difference in their lives. Your decision today can provide security and comfort for generations to come. Let's move forward with confidence that we are taking proactive steps to protect what matters most. Together, let's ensure that our families are shielded from life's uncertainties, knowing that we've taken necessary steps to secure their future. Thank you, and may your journey ahead be filled with prosperity and peace of mind.